Hi and welcome to the Trading Bell. Glad that you have joined us. This is a season where we really appreciate the work being done by financial institutions. And today we have a keen focus on Absa. Which side of it? The corporate and investment banking. And in the house we have James, again, the managing executive, corporate and investment banking right here at Absa Bank Kenya. And they've done quite some significant work, especially in the financial year 2025. James, welcome to the show.
Thank you. Thank you very much.
Yeah. And thank you so much as well for having me here. Yeah. And just for the sake of our viewers, anytime I reference CIB, that will be the corporate investment banking. And so, James, let me start by that. In fact, just want to start from the basic before we get to what you have done so far in this particular sector. When we talk about CIB, corporate investment banking, what is this offering of Absa? What is that side of Absa? Yeah.
No, thanks very much. And always a pleasure to have a conversation with yourself.
Absolutely.
Yeah, so corporate investment banking is the part of the bank that takes care of a certain segment of clients in certain sectors. Yeah. And normally they're the ones who tend to be a lot more sophisticated, have higher levels of turnover. Right. We look at any with turnovers of, around about 5 billion and above. Yeah. Multinationals, financial institutions, public sector organizations. Yeah. Those tend to have a lot more complexity and a lot more structuring needed in solutioning them. And on the back of that, then that gets managed under the corporate and investment banking area of the bank. Okay. Just to give some perspective, we have the overall coverage team that manages the end-to-end solution of the clients and the clients' ecosystems around them. So the full value chains from the supply side to the distributor and the people within the client. And then we've got the product suites, which come in to create solutions to solve the client's needs. So we've got the investment banking division, which has our corporate finance, our capital markets business, which has both debt capital markets and equity capital markets, and then we've got the mergers and acquisitions business that sits within investment banking. We've got the real estate team, which tend to solution more around real estate projects, right from commercial enterprises, warehousing, logistics, supplies, institutions, residential, housing, affordable housing structures. And on the back of that, we've got a team that has the specialty around solutioning that. Excellent. Then we've got our transactional banking team, which again are a very, very critical component. They deal with liquidity management of our clients and also trade and working capital. Okay. So the short-term working capital needs of our clients, but also facilitating trade finance, both from a financing, but a facilitation international trade.
Thanks, James, for that context. And I'd like now to focus on 2025, which was quite significant for you. And I mean, speaking to your CFO and the CEO, definitely there was a big contribution that came from your end on the CIB performance. How was it and what stood out for you?
Yeah. No, thanks very much. And indeed, 2025 was a pivotal year for us from the CIB perspective. Yeah. Pivotal in that we saw our strategy starting to land and come to fore in 2025. Yeah. We're very, very clear that we're going to run a client-led CIB business where we are focusing on sector expertise and solutioning for our clients around the sectors they are in. But most importantly, we're going to also make sure that our revenue streams in CIB are well diversified so that we have a very balanced portfolio of revenue streams, both capital consuming and capital light products. Yeah. And the investments we've been making over time started to actually show up in a very, very big way in 2025. Just to give some illustration on that, we saw our investment banking franchise really come of age in 2025. That's the first full year when we had the full team in place, where we had all our advisory business head in place, but our capital markets had leadership in place also, and of course, our traditional corporate finance team in place. And we started seeing that coming through and feeling a part where we're punching way below our weight in that was the area where we felt in solutioning our clients holistically, we were falling short. So we're very, very happy that we're able to plug in that gap and start providing our clients with that kind of solutioning that came through. And that is a very fee-driven revenue proposition that comes out of that. In our global markets business, again, which for me was a big highlight, was our solutioning around interest rate risk, foreign exchange risk, and facilitating foreign currency to enable trade to happened globally with our Kenyan and regional counterparts. Again, we saw that curve of age, and in fact, from our client solutioning perspective, in 2025, out of the results we've seen published thus far, Absa now is number one in the global markets business. Right. And that for me is really, really a big success for us, in that the strategy was actually working out in a big way. So very excited about that capability that has come through, and the fact that our clients are increasingly using us a lot more, and even the turnovers in a very stable foreign exchange and predictable interest rate environment, we're still able to do a lot more out of servicing our clients. But also just to mention that our custody business, in our first full year of operation, we've seen really great inroads coming through on the custody business. As you are aware, many years ago, Absa, then Barclays, was the leader in custody in this country.
You're right.
That business was spun off, but a decision was made to come back in, because in the overall solutioning of our corporate clients and the CIB client base, we realized a cog in the wheel that was missing was our custody capabilities. So we plugged in that to make sure we are able to offer holistic services to our clients. And we brought back the custody business, and we've seen that also come up in a very significant manner in 2025. Absolutely. So holistically in 2025 was a very exciting year for us in CIB, because that strategy came into place, and we're starting to see the growth arising out of a strategy that has been landed. So very good for us.
And I'm witness to the fact that I saw you severally at the exchange on the floor because of your work in the capital markets as well.
Absolutely.
I wanted to keenly focus a bit more on the sectors. Are there some specific sectors within the CIB or client segments that contributed the most?
Yes. So we've moved to a very sector specific strategy, in that what we feel is very important in CIB is providing thought leadership and sector knowledge to our clients. Previously, we were structured in a segment manner. What I mean by segment manner was we had global corporates, people who take care of multinationals. We had people who took care of large local corporates in that locally managed. And then the value proposition was being very close to the way the companies are managed and being able to touch base with the right decision makers. But over time, we've seen the evolution that clients value a lot more when you demonstrate to them that you understand the business they're in, you understand the sectors they're in, and you're able to have conversations on how they can help them thrive in the sectors. Not only within the sector, but to take it to the next level. So on the back of that, we have the sector strategy that takes care of that, but also the products that then assist our customers evolve and grow within those respective sectors that we play in. So if we come back to where we played a big role in, was the consumer space. The consumer sector, again, FMCGs, etc., is where we saw a big upsurge, because within that there's manufacturing, because many of these FMCGs have a manufacturing process behind it all before the product comes to life, and then they're the ones who just purely trade and bring in goods. But as in the course of last year, we saw interest rates coming down, a very stable foreign exchange rate play out in the market. It also resulted in an element of predictability of disposable income. And therefore, we saw that sector start to show signs of coming into growth. And we worked with our clients through that journey to actually drive that sector up, as it were. Public sector. And for us, public sector is a critical sector that we focus a lot in supporting. Government is the biggest spender in the economy, but most importantly is the driver of future economic growth. So we played an active role in supporting the public sector in whether it is securitization transactions, etc. And we saw the benefit of just working with government to solve things like pending bills. And we saw the impact on that in the economy as money flew in to solve pending bills. The ripple effect is phenomenal in the economy. So for us, that was a very big space to play in, but also the financial institution space, again, for us was an area where we actively played, because we support other banks, we support microfinance institutions, we support insurance companies, we support fintechs, and all these play a very active role in building the economy. And therefore, for us, again, a very big focus area that we saw a lot of growth coming in. But last but not least, agriculture. I mean, being the backbone of the economy, being the area where a lot of the people get affected, and actually a lot of the population have an active role in the agriculture space, and the agriculture value chain is a very, very important area for us. And therefore, on the back of that, we also saw a lot of support coming through in the agri space, both in primary and secondary agriculture in terms of processing. And again, we saw that also bolster our fortunes in 2025 in a big way.
I love that context. And I still want to dig deeper just a little bit more on the context and opportunities that you saw. Because as you have said, it was varied from the sectors that you've described, from government to private sector to everywhere else you've spoken about. So I wanted to ask you this final question on context part. So from your perspective, what opportunities did the market present in 2025 for corporates and even institutional investors?
So 2025, as you know, was the year where we came out of an element of uncertainty. We saw the previous year what happened to the exchange rate. We opened the year at a very, very high interest rate environment, and therefore, most of the opportunities that came through with our clients was how do they navigate the change in macro environment to remain relevant and successful in their businesses. And on the back of that, we saw that as the currency started stabilizing and clients were able to predict, and predictability is a very, very big thing for any player in the economy. So that was a very, very positive outcome in 2025. And then, of course, as the interest rate environment and, with the support of the government and the central bank, we saw the rates actually start coming down. And that, of course, also eased what was the pressure of interest expense on our customers, as it were. And at the back of that, we saw our clients then really come out to start taking advantage of the fact that cost of borrowing is going down, disposable incomes are now starting to come available in the market. The weather played a very, very positive rate in what was taking place, and of course, being able to now be competitive in the global markets, where a lot of our products then go into the global markets. And so, in the back of that, we then played a big role in supporting our clients through that journey to just ensure that 2025, that stability that came through. There's a bit of shocks, supporting them in the risk management place, which our global markets business do. A lot of then companies coming to relook at their capital structures, build scale, change the way they raise capital, and therefore our investment banking team playing a big, big role in the capital markets, whether it's rights issues, whether it's M&A transactions, whether it is debt raising transactions from the capital markets, just helping our customers do that. For us, we saw many customers take advantage of those opportunities, reduce their cost of capital in their franchises, and become more competitive to grow their business going forward.
Okay. Lovely context there. Thank you so much for that. You cannot shy away from looking at how the region is doing. And one of the key questions is what you're doing at the CIB to ensure that your capabilities or platforms are strengthened and are built up. So is there anything you're doing to strengthen that and build your capabilities in the CIB franchise across the region?
Absolutely. Absolutely. And for us, what's important is we now look at us as East Africa. So many people in my team hold regional portfolios and are responsible for the region as it has, because for us, what's most important is that we're seeing many customers being agnostic to geographical boundaries and looking at East Africa, both Kenya, Uganda, Tanzania, and the neighboring countries has one common market. And we've therefore positioned ourselves to ensure that we are able to walk our customers across the borders in the initial East Africa region. But most importantly, we are also seeing people going further ashore into Southern Africa, even into Western Africa. So for us, that is really, really critical. So in terms of capabilities, one, we are building the platforms to ensure that trade across the borders is as seamless as possible. So one, we've got trade management online, which is an automated trade management digital platform that allows trade finance to be done seamlessly, digitally. No papers moving around, etc. But one of the biggest challenges that we've been told is that money moving across the borders is still a bit of a challenge. It still takes time. There's those ones who tell you, I have to send a telegraphic transfer from Uganda to Kenya or Kenya to Tanzania. So again, we are building a platform in Absa that allows that to be real-time transactions, and the Africa Continental Free Trade is also facilitating that to make that a reality. But again, for us, from clients who are moving across to other jurisdictions, to ensure that we are managing them centrally in one place and using our network to walk them through those borders is extremely important for us in the region. Our investment banking, in terms of those who want to acquire in different jurisdictions, those who want to fund from the most cost-effective hub and use that capital to expand into other regions. We supporting them in that, again, becomes most important. But last but not least, in the global market space, cross-border transactions mean different currencies coming into play, and making sure that we have the capabilities, and to drive that is the capability we have built across the group to ensure that within East Africa, we have what it takes to take customers across each of the borders. So something I'm very excited about from that perspective.
And you're right. It's very good for us to have seamless ways. The easiest, the better for us in business.
Absolutely.
Let me just appreciate some notable, and I was glad to be in that room, achievements that I noticed. And let me just alert our viewers here. Absa just got ranked as #1 in mergers and acquisition financial advisor by deal value, and also #3 in general corporate finance by deal value as well. I mean, this is commendable leadership, and the man behind it is right here. So maybe you could give us a context, how you feel about this, and what does this recognition say about the strength of the franchise?
Absolutely. I mean, for me, that was a big highlight. I mean, last week, I was a very excited person because it was a demonstration that the strategy is landing and being independently verified by a third party. So for me, that was very exciting. But I think what that demonstrated, as I mentioned earlier, that the strategic engagements and taking our clients to the next level of evolution of their businesses was an area, again, we were not punching to our weight, and we have built the capabilities to do that. So those awards we won was actually a very clear demonstration that those capabilities now are available in the country to support the region. And what also came through is that we had those capabilities within our group. But what came very clear is that proximity to the market, ability to respond, and to respond quickly, and deep understanding on the way the market operates is what clients were really valuing, and being able to advise them on how to go about transactions. So for me, the M&A win that was #1 clearly demonstrated that that capability is coming to land, and the general financing part of it, again, the number of transactions we've gotten involved in, they clearly demonstrated that that is now landing very well, and something I'm very excited about, and looking forward for Absa continuing to lead in that area of the investment banking space.
Wow, congratulations on that.
No, thank you very much.
Well, as I said, I saw you a lot at the exchange, especially when some deals that were being closed there, and transactions as well. And that speaks a lot to the level in which 2025 was significant. And I wanted to give some context to it, and just paint some color for our viewers to understand what happened there, because I could tell the transactions were quite momentum for us. And I think one of it was EABL. I think I also saw you Asahi deal. We also had the Bamburi one with Holcim, Sankin Solar, and I think you have more on the pipeline as well.
Absolutely.
Could you give us a context of how these transactions tell us about this evolution, especially in the capital markets?
No, and for us, it's two-pronged. One, we've got a duty as a leading financial institution in the CIB space to work hand in hand with government and the state players to develop the capital markets. So we really have to bring in the skills and the expertise to ensure that the capital markets grow. So for us, quite happy that that is coming to place. And our clients are getting different alternative ways of accessing the capital markets and accessing capital in a manner that is most optimal for them at the time. And those deals that you were the exchange together witnessing is just demonstrating that all those different facets are now available within the Absa CIB business. So if it was debt capital market opportunities in terms of medium-term notes and bond issuances, I mean, we played a very active role in that place. And as the market environment became conducive for capital market opportunities to raise capital, we're happy that we're first off the block with our customers in actually taking advantage and showcasing to the market at large that actually there's an alternative source of capital to actually come through. In mergers and acquisition, I think it's very important that as the global business world kind of repositions, everybody is trying to take advantage of nuances and knowledge of local markets. I think we saw the Bamburi Holcim, M&A transaction taking place. It was interesting to see that while it was a global entity just kind of repositioning where they want to play, these were regional players coming in to actually scale up and grow in the region, which they understand very well, and build capabilities across the continent. So for us, it was a big win that the transaction can take place, but most importantly, it's been facilitated on a cross-border manner that is enabling businesses to actually go across.
Okay.
The Sun King transaction was actually exciting because it was securitization in a manner that previously was not being done in a large scale in the country, but now we're starting to see securitization come through in a much more bigger, aggressive way. Sun King did it. We saw the Kenya Roads Board transactions do securitization transactions, and many which are currently, out in the offing to be done. But Sun King, I must admit, led that from the front. But most importantly, Sun King also came with a very positive ESG component to what they're doing.
Right.
And for us, it's something we are very focused on in ensuring that from an ESG and a social impact perspective, we play our part. And Sun King therefore ticked both boxes in that brought innovative financing solutions to the market, but also was addressing, social impact and ESG type businesses, which we are very focused on supporting. And therefore, that was really a great one for us too from that perspective.
Wow, great one. And I love the fact that in your sentences, you say there are many more in the offing. So we're looking forward to seeing
Absolutely.
you more, right?
We'll be very busy at the exchange, I must admit. Yes.
I love this. I'm just thinking about the client now.
Yes.
Now that you have this integrated client offering, we're talking corporate banking, investment banking, global markets. I wanted to ask this particular question of, now that you're enabling all this, how does the client feel at the end of it all when these solutions are all given on the table? What are you observing from your client's perspective, either corporate or even individuals?
Absolutely.
Yeah.
No, so for us, the integrated solutioning is critical because it's all about the client. And for us, is to ensure that our focus is ensuring that the client comes first, and we solution and make banking as seamless as possible so the client can focus all their time on driving their core business, as it were. So this integrated solution ensures that we are able, and for me, success is being involved in every touch point of the client's business in making it as easy and as seamless as possible. So whether it's purely just running the business, whether it is financing the business, whether it's managing the risks within the business, whether it's evolving the business, we have to be involved in all that. And in the CIB business, now we've built those capabilities to ensure that whether it's liquidity management, payments and collections, whether it's working capital needs, short-term loans to just ensure business continues to run and grow, whether it is risk management products to ensure that they are insulated from interest rate risk, exchange risk, or whether it's investment banking, seeing how do they grow from where they are to the next level, that becomes extremely critical for us in CIB. But I just hasten to add that most importantly, now we've moved away from solutioning the client only to solutioning the client's ecosystem. So together with our business bank, with our consumer banking business, what we are solutioning is how do we ensure that the client, even through their ecosystem and their value chains across distributors, retailers, right up to the smallest outlets that deals with their products, and also the supply side, from the suppliers that feed into the business, and then to the staff themselves, the directors, the owners. How do we solve the entire client and the ecosystem around them? And what we are putting in place are solutions around ecosystem banking to ensure that many clients, by the way, carry the load of their distribution infrastructure. They finance it off their own balance sheets. That's not optimal, that's not efficient. And we are telling them, you do what you do best, let us handle that part for you. But the supplier side, many of the suppliers will tell you, listen, I have to wait for credit terms on my... We say, do what you're doing, let us step in and help you make sure that you can even do more from that. And how that helps is that because we have visibility of the flows across, where I could have given you X as a standalone client, now because I can see the flows, I can now give you 2X because of that. And for us, that is where we are seeing the impact of an integrated structure as a bank is coming to help the CIB name and all the ecosystem around them actually all grow together. And for us, that's what success looks like.
No, excellent, excellent. There's another part I looked when I looked at your FY 2025, and against the tide, you recorded some significant growth on your FX business.
Yes.
And I'm saying against the tide because I've looked across the sector and seen that. And I was wondering, what did you do? You know? So I just wanted to understand what drove that momentum from your end and how important in the global markets for your overall CIB strategy. And you could paint the picture, probably the transactions were part of it, I don't know.
Yeah, no, absolutely.
Yes.
Absolutely, yes.
Go ahead.
Yeah, so you see, our global markets business is actually in 3 segments.
Yeah.
So we have the most important one, which is our client-facing business.
Yeah.
And the role of that business is to solution our clients, to work hand in hand with our clients, to ensure that their foreign exchange transactions are seamless, but the risk management part of it through structured financing, hedges, etc., are being put in place. And that business, despite and what's interesting that in the global markets business, when there's no volatility, their margins tend to actually come down, and therefore you only make it up by client flows. And there's been a very, very focused effort on solutioning our client base, right from the retail customer and consumer, the SME client in the business bank space, the commercial client, and the CIB client. So we've been very, very intentional about really ensuring that we are solutioning all these clients and ensuring that all their needs from a global markets perspective are being taken care of. And we've seen the volumes go up quite substantially, and that really anchored the growth that we saw in 2025. Right. But most importantly, we then got a trading business, which takes care in fixed income trading, etc. And again, they are able to have a very good run in 2025, as with the re-entry and a lot of foreign, investors coming in and out of the market, the normal trading, that picked up very, very well. And because we've set up our custody business, you'll find that now we are able to serve a lot more of the global, customers that do business in this part of the world, and they also benefited from that in a big, big way.
All right.
But also our Absa Securities Limited, in which the investment license of the bank sits, is actually housed within the global markets piece. So our stock brokerage business, again, we saw big uplifts in a business that is 3-4 years old, really grow up. So we have a whole stock brokerage business which is now doing very, very well.
All right.
But on the other hand, they also handle the advisory fees. All that happens in the investment banking space actually sits in there. Okay. And therefore, those 3 businesses collectively actually all had a fairly good run compared to the rest of the market. Okay. And that's why you saw them actually now, as of now, and not all banks have published, come out at number 1. Okay. Very excited about that.
As I said again, that was against the tide, and congratulations on that. As we come and near the close of the conversation, big word here, and I heard it as you were releasing your results, capital light revenue strategy.
Absolutely.
I want you to just give us and paint for us that picture on what you mean by this and what you're doing in terms of the strategy on that end.
Yeah. So capital and return on capital is actually very, very big in banks. As you know, in the banking sector, the level of equity and capital held is very, very big. And the investors, in all fairness, as the people who have put their hard-earned earnings into the business, expect a fair return out of it. So increasingly, what banks are looking at, and like ourselves, is that lending is a core function of banking.
You're right.
And many institutions, we included, built a lot of capabilities around that to ensure that we can lend, and we can lend well, and make sure your non-performing loans are down and your loan loss ratios are down. Yeah. And that was a very critical component.
That's the traditional way we know.
That's very traditional. Yes. But you see, the banking has evolved, and the needs of our customers have evolved quite dramatically over time. Yeah. And because of that, you're finding that clients are increasingly needing a lot more than just borrowing. To drive their business. They want to make sure that they have access to foreign markets, they have access to most competitive raw materials.
You're right.
Everything that we make here is now being bought by people who are accessing the whole globe to see where else can they get it from. And on the back of that, you have to make sure that your clients are operating the most efficient way as possible. And therefore, the other products that support a business, whether it's in trade finance, whether it's in the way they manage the risks in the business to be predictable and give long-term contracts, you have to bring in our global markets team to support them, from that perspective. Where it's the efficiency of their supply chains to ensure that nothing is ever lost in the process, losses are at a bare minimum. You find that a lot of then products around the structured trade come into place to actually support that. And as we broaden, and of course, the investment banking space that also now comes in terms of optimizing capital for those businesses, you find that all those are very, very capital light from the way they're actually transacted. Our global markets business is probably the lightest capital consuming business that we have. Trade finance is naturally very, very light from a capital consumption, and advisory, literally zero capital, to put it broadly. So on the back of that, you're finding that as customers' needs have evolved and banks have also evolved in the way they solution customers. The components of banking that was capital heavy is now dialing down, and there's a lot more banks are doing from an advisory, a trade facilitation, global networks perspective that are now services we offer that are very capital light in context. So what we do is to balance the two of them and ensure that net the capital consumption in the bank is coming down. So that has become a very big focus area in the bank in terms of capital light products.
So before you give me your outlook for this year, 2026, I would like to ask you the nice question, which I hope you not spill all the beans. But what would you say is your differentiating factor or competitive edge in such a place where you're also seeing, I mean, a lot of your peers as well thinking also in line how to diversify? What would you say, especially to your clients?
No, I think for us, what's important is first, we are building the sector expertise, and we found that clients value that a lot. When you can talk to a client about the business they're in, you can bring insights, and we've got a lot of research available now. We've got a lot of resources within the group that can even talk to clients about, yes, that's what's happening here, but next door in DRC, this is how they're doing it, and in Namibia, this is how they're doing it, and if you cross the ocean and go to Latin America, this is how it is happening, and perhaps you could consider X, Y, and clients really, really value that. So that works very, very well for us. And the fact that we've pivoted to say the focus is on solutioning the clients, building the capabilities, having the suite of solutions then. And you see, as I mentioned earlier, where we had gaps in the coke, we have plugged all those cokes. So now we've got a full wheel that's available. And then just closeness to your clients. It's really, really important that we are fully in touch with our clients, knowing what they're thinking, what's affecting them, giving them ideas and working together. I think for us, that works extremely well in this environment. And we're very excited that that has become a winning formula, which is really working well for us.
I love that. I love that. Your outlook 2026, where are you placing your bets? Because, you know, it's an interesting season this year, but I hope things stabilize. But what's your outlook like?
So for me, 2026, to the point that you asked earlier, is that we know there are challenges out in the Gulf.
You're right.
Everybody's watching that very, very careful. But with all those challenges, there are opportunities. And for us is to work very closely with our clients to see, one, if there are any who are affected, how can we help them go through the challenge? But if there are any who are seeing opportunities, how do we help them maximize on those opportunities? So I see an environment where especially what's happening in the Gulf will affect prices of oil, and we monitor that, and very happy yesterday we saw the price come down, so that was good news. But from the logistics perspective, clearly you're starting to see a lengthening of the logistical times that goods get to travel. We have to support clients along that line, and also the cost of that is going up. So on the back of that, we are seeing opportunities where there are those where the markets will shift to sourcing from areas which are near, like anything that comes out of East Africa. We have to support clients to take care of that. But for those who still need inputs from different areas of the world which our prices have gone up, we also have to walk that journey with them. So we are watching what's the evolution of the crisis in the Gulf, how that's turning out, working very closely with people who are affected, whether it's the oil marketers, whether it's people who get, granules out of that for their plastics, or use those routings and therefore have to divert the routings to ensure that that works well and support them through that journey. But that notwithstanding, broadly in the economy, we are seeing that, we saw the rating of the country improve by the last series of rating agencies that came out. And because of that, the positive outlook, we are seeing that as a very, very big opportunity for growth in the business community at large, and therefore for us, making sure as a bank, we are going to work with our customers through that journey. So very excited what 2026 has to offer. It will be better than 2025.
Wow, I love this. I like how optimistic you are. And by the way, because of this particular situations we have seen, you're seeing, how is the interest like from global investors? Are they streaming in?
I think what we're seeing, of course, there's a need for global investors to diversify where they are placing their currencies. The knee-jerk reaction is always to bring your money back and say, hey, let me see where I can see it, repositioned, and then start deploying it to areas which are not affected. And I think for me, my outlook is that the part of the world we are in is by far and large insulated and nearly playing a safe haven status out of that. And therefore, we'll probably see some deployment of capital coming to Africa and the continent at large, because we are technically insulated out of what's happening in the Gulf, and probably a place to park your liquidity in as you watch how things turn out. So also seeing opportunities there.
All right, safe haven.
Fantastic. Thank you very
James,
much.
thank you so much for your time.
Always a pleasure chatting with you.
Wow, there you
Fantastic.
have it. That is James again, the Managing Executive Corporate Investment Banking here at Absa Bank Kenya. He's very optimistic about how we are faring on the year 2026. And we just need some voices like this, and the numbers speaks for themselves, as they can see from their FY 2025 and how the CIB sector really performed on that. And we really wish them well as well on that. That has been it right here on the Trading Bell Show. I leave you now with the markets.